Let's check out and review Tom Nash's video, Buy These 7 Stocks in 2025 and Never Work Again. I know Tom Nash in the past has had a few scandals with FTX and other things. However, recently I've been watching a lot of his videos and I found them to be very valuable. He preaches a very simple yet effective strategy of dollar cost averaging into high quality stocks. And while there might be people who will judge him for his past mistakes, the reality is that nobody's perfect. The recent videos I've seen from Tom Nash have been very valuable. While I'm not a fan of buy and hold, I think that you can structure the transaction much better using options. I still watch some of his videos for trading ideas, but I haven't watched this video at all. So let's get started.
Let's talk about the top 7 stocks for 2025. And as always, I'm not about to hold you hostage in this video. As I do in every video, the bottom line always comes first. The analysis comes second because I value your time and I don't need the extra ad money by holding you for another 2 or 3 minutes on the video you don't want to watch. I've made a lot of money over the past 3 years by investing in Palantir and Tesla and the S&P 500, which makes me kind of not care about ad revenue on YouTube. Now look, the list is very simple. I'm giving it away in the beginning of the video. Yes, I'm not lying. The list, write it down. AMD, Google, NVIDIA, Tesla, Palantir.
Regarding his list, AMD is on a lot of these top stocks for 2025. I'm not that familiar with AMD, so let's see what he says about it. Alphabet and Google, obviously they have a monopoly on search. YouTube by itself is probably worth $300 to $400 billion. NVIDIA is the leader in semiconductors. Tesla, even though their revenue is slowing down, they have a superstar CEO who's going to get preferential treatment with the incoming administration. Amazon is obviously a leader, both in online retail and with their AWS cloud storage. Meta Platforms, obviously it's huge in social media and they generate tons of money and their gross margins are incredibly high. And then you have Palantir, which is a lot smaller than many of the companies on this list. However, it has great momentum, government contracts, and it's also a play on AI. But let's watch a little bit more of this video, specifically with AMD, and see what he says, because I'm interested to learn what his analysis is.
Amazon and Meta, in no particular order. The order was absolutely random in case you're wondering. Now look, first of all, I hope everybody had a relaxing and an enjoyable New Year's with your family, with your loved ones. Now look, AMD is probably one of the most misunderstood stocks in the market. I know it's not great, I know it has problems, but it is absolutely misunderstood and it lacks all the hype and the hoopla. Stocks like NVIDIA, Palantir, and some other names like MicroStrategy, it's not a hypey name right now. And that's exactly why I'm interested. I like stocks that are beaten down, stocks that are not hyped up. I just want to remind you, I was excited about Palantir at $6, and nobody was thinking that's a good bet. Right now, you're getting AMD at 23.44D. That's not expensive.
I'm not a fan of using PE. If you look at some of the highest returning stocks ever, they probably had very high PE because the market is forward-looking. If the market projects extremely high growth rates, both on the top line, which is revenue, and the bottom line, which is net income, then the market has shown that it has no problem bidding up the stock price because it expects that company to grow into its valuation. In general, buying mature companies with depressed PEs does not work out well because it tends to indicate a slowdown in growth.
NVIDIA basically is the gold standard of the industry as far as data centers goes, right? That is true. Broadcom is probably second. AMD is a distant third. However, it is currently being priced as if it already has died, as if Broadcom and mostly NVIDIA basically took 100% of the market. Now, as I'm about to show you, that is nowhere close to be true. While AMD is far behind, they're not dead in the water yet. In fact, quite the opposite. They are about to carve out a piece of the market for themselves. You see, unlike NVIDIA and even unlike Broadcom, AMD does not need to be the number one in the market as far as data centers. It just needs a piece of the pie. It's not as big. So for this stock to do very, very well, it just needs to be a part of the game.
I disagree with him here. I think it's better to invest in market-leading stocks. If you look at a company like Intel, which has probably been around for around 40 years, it was very popular in the 1990s and in the 2000s. But once they lost their market-leading position, they've basically gone nowhere. And the money that's been invested in Intel recently has significantly underperformed. So I think that out of all the companies that he's recommended, this is his weakest pick. But let's see what else he says.
Because what we're talking about here, as far as the data center market, it's massive. You just heard the Oracle founder CEO, Larry Ellison, talk about the fact that he was begging Jensen to give him some more chips. NVIDIA is currently not just a monopoly. Everybody wants what they have to sell it to people because there's so much demand and just a limited amount of. If you look at the market and say, well, A, not everybody can pay NVIDIA prices, and B, there's just not enough for all the other demand in the market. So if you look at the capacity and the fact that AMD can give you.
But I think what he's missing here is I think that the NVIDIA chips are actually better than the AMD chips. It's probably more so a quality issue as well.
Cheaper product and also solve a lot of problems. And you've also kind of looked at the AMD track record. They went up against Intel and actually not just carved a piece of that market, they basically killed Intel. So AMD have been there before. The market needs a cheaper alternative, and just generally, a market needs another player in this data center business. Again, AMD does not need to be number one, nor do they aim for that. But if they solve the problem of the price and the capacity, they will generate some income, and it's actually already happening. This is what most analysts are not telling you. Look at AMD right now. AMD last year did $7 billion of revenue from data centers, right? This year, according to management guidance, they're about to double that and generate about $14 billion.
That's pretty good growth, though, on that specific segment of their business, getting 100% growth. We'll briefly look at AMD on stockanalysis.com before we wrap up this video.
NVIDIA numbers, but they don't have to be. The fact of the matter is AMD is about to double their income from data centers, which means they don't need the massive amounts of sales NVIDIA.
I guess my issue with this is that if there's an expectation that they're going to double their segment income by 100%, then it's already been factored into the stock price.
Generating to grow. Net income of the past 12 months grew from 200 million to 1.8 billion. That's an 800% increase.
That is a large amount.
While at the same time, operating expenses went down, while operating income went from negative 90 to 1.4 billion. At the same time, debt went down by 40% in the last 12 months, and currently AMD is at $4.5 billion of cash and 1.7 billion of debt, which is a setup I absolutely love. Lots of cash, not a lot of debt, and the net income margin just goes up and up and up, and the company's generating sales. They're not dead at all. In fact, they're getting better. Now, according to my own DCF, the current price of the share should be
DCF should never be a primary means of valuation. Nobody uses it as a primary means. Sometimes it's used to support valuations, but there are so many inputs in there that you know are going to be inaccurate that even a slight modification in the terminal value multiple or projecting out future cash flows would probably knock this price down to less than $100 a share.
The market is pricing the stock at $122, which means AMD currently has 26% upside. Now, that's not a huge number, but again, we're playing the smart game here. We're not going for shit coins.
I definitely think that you can structure a transaction in AMD, which would be much more valuable than simply owning shares. For example, you can buy a call credit spread and then finance that by selling some put options. Because it has a relatively tight price target, you can buy the 125 call and then sell the 155 and then finance it by selling some out-of-the-money put options. By doing that, it allows you to purchase the shares at a lower price so that way you get a better entry.
Price, it's definitely interesting. Now, if you look at my 5-year pricing model, the bear case, I have it at 131, and the mid case is $219, and my 5-year bullish price target for AMD is 307.
It's great that he's put together these charts, but we all know that projecting future prices are very difficult.
Now, let's move on to Google.
I think that out of all the stocks he recommended, AMD is probably my least favorite, but I also have no idea what's going to happen in the future. So maybe AMD, out of all these stocks, is going to perform the best. Let's quickly check out AMD on stockanalysis.com. So over 5 years, it's gone up. It's actually down over the past year, 6.5%. It has a $210 billion market cap. I'm not a big fan of fundamental analysis, primarily because I think that the market tends to price in all the publicly known information. They're increasing their amount of shares outstanding. Generally, I like to see companies that are buying back their shares as opposed to diluting them. Their EPS growth is substantial. However, you have to be careful with these EPS numbers because you have to take out the non-recurring items or the earnings that are not attributed to the ongoing core business. For example, let's say AMD made a strategic investment in Bitcoin. That could show them a large profit and then skew the EPS. However, because this is a one-off event and it's not part of their operations, you would then back that out and it would decrease the number. Now, I'm not saying at all that this is what happened here. I don't believe that this earnings number is adjusted to remove non-recurring items. EBITDA, that's an investment banking term. EBIT is basically operating income. You use EBITDA to neutralize the capitalization structure. I don't want to get too in depth here. I worked as an investment banker for about 5 years on Wall Street. And basically, you can look at EBITDA and EBIT as replacements for operating income. I'm not really a fan of AMD. Out of all the companies, I think that this is his weakest pick. But overall, I think it was a great video. And if you liked this video, then watch the video that's popping up on your screen right now because YouTube believes that you would enjoy it the most.